The same process that I adopt on Tesla, I will do it for SPY, for the futures, for Meta, Amazon. So it's the same exact process.
Are you monitoring your entire trade on the 1 minute once you develop your plan?
Ideally, this could be or a fake breakdown at the gate and push all the way up.
What's your advice around that for people who are going to try to scale out slowly so they can take more of the move?
So instead of stopping out, you stop out and at the same time it gets long for the same amount of the position that you had over here.
Do you have any plans around that in terms of rules, like on the first go, or do you kind of like pre-plan?
This is a pattern that I like to trade. It's the trend line we were looking at before. We have over here what I call a J-line rejection. I like to enter over here, risk above, and then I calculate my risk-reward ratio.
Welcome back, everyone, to Be the Trader. Today is a fun, great day because I got Jay Trader back on the show, and we're going to be diving into 2 trades, and he's going to be analyzing them with us and explaining it very thoroughly so that way everyone can learn a lot. So take notes, and if you have any questions, you're definitely going to reach out to Jay Trader. We'll have his links to his website and all of his information below. So Jay Trader, welcome to the show, bro.
Thank you very much, Alex. Glad to be over here since last time we met in Las Vegas. Was amazing.
Oh yeah, man, it was a great time, and I can't wait to do it again one day. So it's gonna be great. Well, look,
Thank you
man.
for having me here.
Oh, absolutely, absolutely. I'm so happy to bring you on the show again, especially to dive deeper into specific trading. So if you'd like to take it away and start with a specific trade, let's go for it.
All right, so today I'm going to share 2 stocks. I like to trade Tesla a lot because it's very volatile. And as traders, I think one of the most important things is to find volatility and liquidity. This is also a stock that has incredible options. So often you will find it cheap from Wednesday on, especially if you start looking for weekly options. Here we have an hourly chart. I can zoom in, and I use the hourly chart as my major time frame to find the supply and demand areas. I start, first of all, my plan with the monthly, then I go weekly, daily, but the hourly chart is my way to go. And you can see that I trace over here 2 major levels. One is the supply, so we have this 279, and I like to keep it as a band, not really like, a line. Yep. Often traders, they just put a line like 279 is that. No, it's a range. So I know that if that level was rejected or from there we had a bounce multiple times, for me it's going to be a level that I will consider. And then I do the same thing for this level over here, 266. So it bounced over here, it bounced over here. I start seeing some consolidation over here. It bounced again over here. For me, that is going to be another important level. So from this chart, I look at the main picture. It's very simple: supply, demand, trend lines, chart patterns, like, could be a double top, reverse, head and shoulders, pendant wedge, all of that. After that, I start moving to a lower time frame. And for example, we can go over here to see a 5-minute chart and see what happens during the day. The point is, my first analysis in the morning after tracing my levels is looking at the 5-minute chart, 5 or 15 minutes. This is a 5-minute chart. And what I want to look for is that pre-market range. So I'll put a level of pre-market high. Over here, we're around 276, 276 and 50. And then I'm going to put a level of pre-market low. Sometimes we'll have a small tight range for Tesla, something like a couple of bucks, maybe 1 or 2 points. Other times we can have a big excursion. So high volatility, maybe even like 6, 7 points. The same process that I adopt on Tesla, I will do it for SPY, for the futures, yes and NQ, for Meta, Amazon. So it's the same exact process. And over here, I want to look for, is this range outside of the previous trading range, or we are inside the previous trading range? So are we playing a breakout, a breakdown, or are we still inside yesterday high and yesterday low? Having that in mind, I start looking at what is the potential play. And my point is not having a bias, because I see a lot of traders that they try always to find the bias. Is going to go up or down. For me is I have my strategy. I know that I can play long and short. So I put a plan A, which is long, and a plan B, which is a short type. And as soon as I see this, I start looking also at intra-range support and resistance. And we can see another one over here. So this is 30 minutes before the open. And this is what happens after the open. So I start seeing over here a very tight range. And I know that ideally, this could be or a fake breakdown at the gate and pushed all the way up.
Yep.
Something that I like to call it reverse FFT, so reverse follow through. If you look at NQ, ES, NQ did the same thing, for example, yesterday morning. It's something that you will find often in future because this is a major level of bear trap that big hands or smart money they will do. In this case, it doesn't happen. But the fact of having that in mind so that they can clear support, trap short sellers, make stop out the longs, and then reclaim it is often the best way for the big hands to trap the retailers and manipulate the stock as they want. What we have over here instead is a breakdown, and after over here, we can see the pop. So it pops into that resistance, previous support, and then we can see that it simply unwinds to one of those demand zones that we had. My point is exactly this, and I'm going to show it. So this was the same day, the commentary that we were giving, and I can repeat it over here. The factors to short are below the previous day low, heavy selling pressure, tape all red with big blocks of sellers, fail of the Zealand's hourly, breakdown the key level 270, and a pattern. So if we look over here at the setup, we can see a few things. Price, as we said, is in this range. And over here, we said before, it can simply or break at the gate. Actually, this is the support, or break at the gate and right away climb up. So that will be my short. Or in this case, we simply gonna use that previous resistance, previous support, now resistance. We pop and we fail all the way down. I wanted to share, Alex, this example. And over here, you can see that we had the trade starting from the pre-market. Because for me, as you know, I have this range. This is a pattern that I like to trade. Is the trend line we were looking at before.
Yep.
We have over here what I call a J-line rejection. I like to enter over here, risk above, and then I calculate my risk-reward ratio.
Hey, we wouldn't be able to do these face-to-face interviews if it wasn't for our sponsor, Cobra Trading. So if you can just give them a few seconds of your time, we'd really appreciate it. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show.
The point of this is not showing a win, it's more showing the trailing. Because I've seen that day a lot of traders that took this trade,
yep,
or in pre-market or at the gate, but they cut their R return. So for example, they got out everything over here on the swash out. And the fact is that as a trader, we have to increase the R return. So maybe you have a 50% win rate, but when you get stopped fully. And when you get a profit, you cut down and you cut completely your wins. So you're never gonna be successful. In this way, I wanted to show, to give a bit of wiggle room. So I let the price go back over here and I use that support, now becoming as resistance, as my trailing. And this happens often. because we will have, for example, over here, dip buyers. So thinking this is like a discount. So they're trying to buy it over here. But then again, we'll end up into a resistance, which is a previous support. And then from here, if I see this rejection, I start monitoring every single lower high in order to trail as much as possible. You know, the perfect will be I short full size. I know that over here we have that demand zone that we just saw before over here.
That's right.
But nobody knows that, you know, we'll get perfectly the setup over here and is going to reach that point. So this for me is important to trail. And what I like to give as a tip is to have multiple time frames. So when I run my trading station, I don't have only a 1 minute and a 5 minutes, but I have an hourly chart to see the levels. I look also the order flow. Some traders will look at the order flow. Some traders will look at the footprint. And then I start looking at a, I would say, confluence of signals on multiple time frames. So what I see on the 1 has to be reflected on the 5, on the hourly, so that I always know in which area I am in the chart.
That's really interesting. I'm curious, like, are you monitoring your entire trade on the 1 minute once you develop your plan and find all the levels and making sure they're aligning up and confluence on each time frame? Are you mostly focused on a certain time frame during execution, or are you still, focused everywhere on all frames?
I look at all time frames, but then for me, when I want to trail, I will trail the first part of the trade when I have a big range on the 1 minute, for example, using lower highs or a 9 MA. Some traders will use a 9 MA, some traders will use like a 13 or a 20. And then the second part of the trade, I will use a higher time frame, like a 5 minute chart, 9 MA, so that I can trail a little bit with a little bit more wiggle room and more range. So I shift between the 1 and the 5. Generally, they are like, next to each other. So hourly, 5, 1, and order flow. Order flow is more to see for me those levels where I see that there's a big amount of liquidity. For example, could be a big wall of buyers. And that gives me, okay, over here, let's trace some. Let's trail a little bit of position. For example, over here, we had this this level where we had a lot of liquidity, another lot of liquidity. So in those liquidity areas, I try to take some profit. I scale out over here.
Okay. And I'm curious, whenever you are scaling out, any advice, or like, are you a scaler that's like big chunks at the beginning, small chunks at the beginning, then big, or exact percentage every time? Like what's your advice around that for people who are going to try to scale out slowly so they can take more of the move?
I think I've studied and I've seen every single type of trader. So who, for example, recycles a lot, who takes one only trade and scales out maybe in 2 times, 5 times. Right now, I like to use these hotkeys that I have, for example, that I set on my chart where I want to put the stop loss. So for example, if I want to put a stop loss over here and the price in this moment is over here, he will set me a stop loss over here for the amount of dollars that I want to risk. And then I have already preset orders. Of course, for pre-market won't get filled, but it will still tell you the levels. I get out 25% at 2R, 50% at 4R, and then I can move my last trailing, which would be the 25% for 8R. So I like to have something pre-planned. So let's say something happens or I go away, I still have some set, and then I can still modify. Let's say we had a very big support on the daily. I'm not gonna wait for the 8R that maybe is over here. Let me take the profit over here. But that's the idea. So I have already preset stop loss and preset targets. That is like stress-free. If you tell yourself, I'm gonna risk for the day $500, $2,000, or $50, it doesn't really matter. That is your max dollar risk. Then it's only about the traders working, or you cut it even before, and then you take your trails. So by this, you have even more patience. And I've seen traders adopting this system, they have, I would say, more patience in holding the trade instead of cutting too soon.
Yep. And so you're saying 25% at 2-1, and then 50% at 4-1, and then 25% around 8-1 is what you ideally would like to
Exactly.
go for. And that's obviously on this specific setup. I mean, I'm sure every trade's a little different. Sometimes if the max R, I mean, unless you always go for max R of like 8+ trades, but I'm assuming there's some trades that you trade that, you know, the max R you can make is 4R. Is that correct? And so you'll just
Exactly.
adjust it. Okay. Okay.
Exactly. So like in that case, the 4R, let's say we take it, and then I will trail the rest at 1.5R. So giving still a little bit of wiggle room, but of course we won't get the 8R.
Okay.
So it's levels that you can adjust along the way. And that's the beauty of using hotkeys in this way.
I love that hotkey you're referring to. Is that I've known a hotkey like that on DAS where you can set where you want to be stopped. You press the hotkey, it immediately calculates, you know, your dollar risk and puts your position in at the price that you're, you know, selecting your hotkey at.
That's it.
That's such a cool hotkey. I used to use that all the time. Me and my buddy, I think Carl. I think you know Carl. I think
Carford, yeah, of
yeah,
course,
yeah.
buddy.
He showed me that, and that what a cool hotkey.
Yes.
For anyone who's curious about that hotkey, I don't know if I still have it. I'll have to check. But do you have it? Do you mind sharing it? And we can share it.
Yes, you can
Okay.
ask me. I will be sharing it. Also,
Okay.
the
Cool.
reverse hotkey is very important
The which one?
because the reverse hotkey, because sometimes let's say you're short, you get stopped right away, it gives an opposite direction and you go long.
Oh, so like you could press the reverse hotkey, like let's say for this play, because you mentioned this play could have gone two ways. It could have cracked and just tanked like it did, or cracked and reversed, because that's a liquidity zone that people like to soak up at the open and then reverse. So if that
Exactly.
happened, what would your hotkey do to revert? Like what would happen? Could you explain?
So over here we have our short,
Yep.
and let's say this is going to reverse. Instead of stopping out, then deciding to go long, that sometimes is just like a double shift for your mind. Instead,
Yep.
you do everything with one hotkey. So instead of stopping out, you stop out, and at the same time, it gets long for the same amount of the position that you had over here. And sometimes really saves you in the market when it's really, I would say, choppy and reverses very fast.
Will it reverse and reverse the stop for the new position, or no? Or you have to set the
It
stop
won't
manually?
reverse the stop.
Okay. Okay. So you have to manually put the stop. It won't, will it calculate the risk, or you have to, it just flip it like the exact amount you were risk, the exact size you were long, you would flip short or short.
It will reverse the amount of that you are long in, so let's say short, let's say 100 shares. He will now long the 100 shares.
Okay. Okay. Cool. Cool. Yeah. And that's a good point that you said earlier. You're not really a bias. Like you don't find a bias. You're just more so you find your zones, your areas of interest, and then let the chart play out. And you have, so there have been times I'm assuming that you'll flip positions in the
Exactly.
same minute, if you will, or same 2 minutes of an
Exactly.
execution. Okay.
Exactly.
That's interesting. So I know there are traders who are going to try doing that one day, and they're going to do that, Jay. And when they flip their position, they're going to be wrong on the flip, and then take another lot. Like how do they? And then they're going to try flip again and flip again. Like how do you prevent yourself from flipping too much? Like do you have rules to help you not constantly flip back and forth?
Yeah. So I give myself 2 times to trade, especially when it's the open. I need to show you something. So I think this is going to be more explanatory.
Okay.
Let me know if you can see my chart. It will be black right now.
Yep, it's black.
But essentially, let's say this is our pre-market low, and this is the open. So often we see this, and I remember this setup on NQ yesterday. I remember this setup on Tesla a couple of days ago, this setup on Meta. So this is the open. And the first thing that I will do over here, we fail, we pull back, and I take a short over here. And that for me is a perfect short. But once we go this level, or we do this, and then we unwind and we can recycle, add more, or if this doesn't happen, and we're going back over here to above this area, so above the pre-market, and then start to curl, over here, I need to reverse my position or entirely close my position. So I'm short over here. This is my short. And then over here, I cut my position and I go long because this is a pattern and this is a bear trap.
Yep.
But let's say we go back to this level, where's the open, and we have another flip. Now I'm done. I'm not going to trade anymore because as we know, traders, we form a trend with 2 consecutive higher lows and our highs. So over here, we're putting now our decision to go long. So this should be like this and not going back into a range, which eventually it can still break down. And then I can decide later on to go short over here. So once I look for a position, has to be one or another one. And that has to break my range because if it sticks then back in the range, there's no point for me to trade that again.
That's a good rule because there's been a lot of times where you can get chopped up over and over in the range too.
Exactly. So, that's the worst.
Absolutely. So when you say you give yourself 2 tries, do you view trading as like 1R is what you want to risk?
Yeah.
Okay.
Always.
So if you're trading and you're going to give yourself 2 tries, do you divide your R by, by 2, just because you're going to get, or do you give it 2 R's of loss, like 1 and 1? Like, what is your thought process on that?
For a day, I will give maximum 3 R's.
Okay.
But what happens is that I don't want to risk my entire P&L, so risk for the day on one single stock, because maybe you, Alex, you'll trade today Meta perfect. Me, maybe it's my perfect setup, and I won't be, I would say, tuned with the market. So it can happen that I do a loss on that, and why have to continue to be stubborn and fighting over and over? Maybe I take a second chart, take a second stock, and that works simply good. So it's always about, you have to think yourself as an hedge fund manager. So you have to divide your risk, asset allocation. Even if you have a playlist or a watch list and you're going to trade 1 or 2 stocks, try to divide always the risk. You cannot divide all the risk for one thing only. For example, yes, try to divide for yes and Q multiple products, because not all the products will work that day. And that's for me something very, very important, like to differentiate asset allocation.
So that's a very good point. And so basically what you're saying is whatever your max R is to lose that you're comfortable with for the day, depending on what you're playing, if there's multiple plays that day, you want to make sure you don't risk all of that in one trade. Divide that by the amount of trades you may be taking. And if you feel like you're kind of off on, and maybe you're trading Meta today and you don't really trade it, you're not confident, but you like the setup, maybe you divide that 1 R for that trade and divide it by 2. So that way you can, maybe have 2 tries at it and still not go over. Is that about right? Okay.
Yeah, I prefer, like, you take, for example, you have $2,000 risk for the day.
Yep.
So I'm going to risk maximum 3 trades, 700, 700, 700, more or less. So I know that, okay, on this first trade, I'm going to risk 700. And then I still have 2 tries for the day. And of course, I want they all work, but it's not going to be almost ever that they all 3 work perfect for, your 8R. So that's for me being very specific and systematic in the way that you approach the market.
And if you divide that trade, let's stick with that example, 700, 700, 700, and you're attacking with the first trade, are you going to risk your full 700 usually? Or do you have any plans around that in terms of rules, like on the first go, or do you kind of like pre-plan, I may need to give this 2 shots and divide that 700 by 2?
It depends really from the personality of the trader. If you're somebody that likes to take starter and skilling in, 5, 10, 20%, yes. But personally, I like to stick to a playbook. So it will be for me 1 or 2 shots, the most. And generally, I will take the full size position in 1 or 2 trades, no more than that. Because when I enter, I have to be sure that that's a set. I'm not entering thinking like maybe this will work, and then I'm going to add only to, wet my feet or think this is started. It doesn't work for me.
That makes sense, man. I really appreciate you explaining that. And before we start to wrap this up, by the way, I really want to dive into something else. I want to ask you about, because you explained on Tesla, and I know you trade small caps and big caps. So everyone listening, I'll probably bring Jay back and we'll go in detail for small cap, because I know he had some plans on that. But I want to talk about staying on Tesla for a second. When you're trading a big cap and you have that setup on Tesla you were interested in, does the overall market impact your decision in terms of if you see the SPY being extra bullish, like super strong, it's breaking key levels, but Tesla looks weak and it looks like it could be a good short. Would you still short it? What's your thought process behind that?
So I can give you this example from yesterday. Tesla breakdown of 200 from 210 back to 195, all the market pushing back up. So it's true that when I trade big caps, I have the Qs, but mostly NQ. That's the leading guide if you trade tech stocks, Meta, Amazon, Nvidia, and so on. But Tesla is a beast on itself. So there will be days that it has the same relative strength has, for example, NQ, it follows along NQ, and you will see, wow, every single dip on the VWAP or pre-market support is the same. Other days you look at NQ to trade Tesla, you will get kicked. And that's the reason why, for me, it's very important to analyze price action, the volume, how the market is moving. And like this morning, even this morning, Tesla was not really moving how the indices were moving. So if you trade Nvidia, Amazon, Meta, Microsoft, Apple, I would say that indexes, unless it has some kind of news that data stock, are very important. Tesla, less. It's a beast on its own.
That's a good point. I'm glad you differentiated that Tesla is a beast on its own versus like Microsoft, Meta, and so forth. So let me ask you, Jay, before we start to wrap this up, I know people are going to have questions. They're going to want to know more. They're going to want to learn more. How can they find out more about you, man?
So you can find out me at Twitter, JTraderCo. You can ask me questions. We have a trading academy over here in Italy, and I'm glad because this year we had a lot of traders participating over here, even coming from the States. And then we're going to have a special, as you know, in April in New York, Manhattan, for 3 days live trading, and also in Denver in May 2024 for 3 days live trading.
Awesome. Well, look, Jay, I appreciate you always being here, my man. And again, thank you so much for sharing some of this knowledge.
Thank you very much. See you.